The Chancellor delivered his mini-budget or autumn statement in November. There are a number of tax changes which have been well publicised: a 2% reduction in employees' national insurance, a 1% reduction in self-employed national insurance, reductions for big companies for their capital allowances, and some changes in the rates. So what's in the budget for small businesses? So I'll just have my little rant now. So small limited companies, we're the only people, limited companies are the only people who had an increase in our tax, because the tax rate for limited companies went up from 19% to a whopping 25% or 26.5% at the margin for actually an awful lot of small companies. We're the only group of people that had tax increases, and now we're the only group of people, as far as I can see, that don't have a tax decrease. And it does annoy me, because we are the acceptable face of capitalism in stark contrast to big companies. There we go, that's my little rant over. I'll get on with it now, I'll concentrate. There is a seesaw of whether it's worth having a limited company or being a sole trader. And when I say a sole trader, I also mean a partnership or a limited liability partnership, because sole traders and partnerships are taxed in a similar way. It's probably worth just recapping on what are the advantages of having a limited company. Well, first of all, there is the limited liability, which means that you are protected from your creditors if the company doesn't succeed. Now, to some extent, that's also the case for limited liability partnerships, although the tax, because it's taxed differently, it's not quite as good, but in a limited company you do get limited liability, which is to some extent replicated in the LLPs. So that's one advantage. The big tax advantages of having a limited company come about by the separation of the profits from the individuals that own it, which are normally, in a small company, it's the owners and the directors are the same people, and they're in charge of the business. The advantage is this separation means that you choose effectively whether to take money out of the company, you choose whether therefore to pay higher rate tax, so that you can use different members of family and their tax allowances. This can mean that you don't pay higher rate tax, and it also in particular means you don't pay higher rate tax on the retained profits of the company. And if you retain profits and then sell the company, it may be that you only pay capital gains tax and you don't never pay the higher rate tax on them. So those are significant advantages. I guess the other advantage is that you pay your tax later. So if you're a sole trader, you have these weird payments on account, which mean that sometimes you have big tax bills, sometimes you have small tax bills, but you definitely pay your tax earlier than you would in a limited company, where for a small company you pay your tax 9 months after your year end, and it's more current if you're a sole practitioner or a partnership, and that length of time gives you a bit of time to save up your tax money and to get your ducks in a row, if you like. So what are the tax rates? What am I talking about? As we stand now, or as we're going to stand from 6th of January, if you're a sole trader, you'll be paying with tax and national insurance, you'll be paying 28% tax. If you're in a limited company with the dividend tax and the company tax, if you pay at the lower rate, the 19%, then you'll be paying 26.1% tax. There's a 1.9% tax benefit in having a limited company, which with all the faffing around you've got to have with a limited company, I don't think that it's worth it just from a tax point of view. If you're a higher rate taxpayer, you actually pay more in a limited company. So as a sole trader you pay 42%, whereas in a limited company it really depends on the rate that you're paying, but it's something just a little bit north of 50%. But the thing is, not very many people in limited companies pay it because they can limit how much they take out of the company. The tax advantage of it just got a little bit smaller. So the question, I guess, the big question is, what would I do? What do I want? Do I want to go into a limited liability partnership from being a limited company? I think for most people, it probably doesn't make enough difference to have it to changing your status. For most people, you will still be better having a limited company. For smaller businesses that have profits of less than 50,000, I think the thought of incorporating becomes a little bit less attractive unless you're worried about the limited liability aspect of it, or you want to grow the business and you want to start as you mean to go on. So there we are. The Chancellor's little budget, lots in it for employees, for self-employed, for big businesses, small limited companies, not so very much. I'll keep you up to date on tax and accounting issues, and when we have the main budget, maybe there'll be more in it for us. If you press the like button, it really helps me and the channel, so thank you.